All right, all right. Sam here. We are mid morning on November 7th, and thought we'd take a look at Bitcoin, a few things to note here, and perhaps some opportunities. So I'm back here on our reference chart that I've been using throughout this entire wave structure that we've been experiencing. This is the 4 hour Bitcoin to the dollar on Bitstamp. Now, we're in the midst of this correction, and as has been the case with Bitcoin, it's been tricky to try and find the right entry. But we potentially have some clarity here if we get if we can break this low. So we have a series of potential support zones where we get confluence. And that's what we're looking for, where we can get that combination of price pattern with fib relationship and geometry. So we have the potential here for some really good looking entries. But as you look at this, and you can say, okay, well, here's my 38, here's my 50, and here's my 618. Well, how are you going to pick which one is going to be, the entry that is the good one? And nothing says that we have to stall here. We'd be changing the count if we're going to go down and break the 618. So it becomes a process of trying to analyze down on smaller time frames, because otherwise you're buying here with a stop below and then buying here with it, or you're averaging down, which can be a very expensive way to try and get long the market. I mean, there are people that do that. But if you're really focused on the money management side of it, as I would encourage you to keep your eye on that ball at all times. We want to be a little bit more selective about jumping in simply because we're hitting a 38, a 50, or a 618. So if we look here now, you can see here now we're to and through. We're kind of struggling here on the edge of the internal pitchfork here. So so that's the 100%. Then we have the 200 on the outside edge, and we've gone to and through that actually a couple of times. So one thing that can be a good idea to do when you have this break of the geometry is to just grab a trend line, and let's put it right along the edge there and just run that up and then stop it, and then let's pull it off just a little bit so we can get that warning line that's potentially coming into play. If we were to break here and go a little bit further, we'd look for that to offer potentially some outside edge support, if you will. So looking here now, I mean, since we're looking for an ABC, a three-wave correction to correct this impulsive structure to complete a fourth wave, we want to start by looking at, okay, well, what are the most typical fib relationships between that A wave, a B wave, and a C wave? And down here, where would be the highest probability zone, we've got our 50% of the 2 to the 3. Here's the 50%, and then if indeed, and we can't be definitive about it just yet, if we've got an A into a B and we're going down for a C, we get this nice confluence right here where we get the 100% alternate price projection within a few dollars of the 50% retracement. So this is a high probability zone. We can't rule this out here. We've got the 618 of the A wave and the 382. Can't rule that out as potential support. The characteristic throughout this has been shallow retracement, so we got to keep an eye on that as a contender. But if you just back up and say, well, where's the highest probability and the most likely pattern to take us? Well, certainly you'd want to be paying attention if indeed we come down here to this, let's call it 66 and change, right? It's going to depend on your exchange. But on Bitstamp, it's right here at, call it 66.20. You'd certainly want to be alarming. You'd want notification if we reach that point. Let me put it to you that way. So let's see if we can get some better entry timing and a look at whether or not any one of these support areas is going to have a higher probability than any other by going down to smaller time frames. So I'm moving from the 4 hour, and we'll go down to the 1 hour, where we can get a better look at this. So here's the wave count as I have it. We have potentially our top here of this third wave. So if you look over here, here's our 1, our 2, and then we have a completed 5-wave impulsive structure to complete that third wave right at the median line, right? So it couldn't be any more textbook. And now we're starting to correct that. So if we look now, we've had a couple of possibilities. So the first possibility was that we had the A in, we were at the B, and we'd put in a C. And until we break that low, that still is potentially a count that works. We might be looking at a 1-2 here. We can't rule that out. That's why I'll often tell you, you need to keep an alternate count right next to your primary count so that if you start to see this market start to move higher. So if we were to break this channel, break the 618, well then certainly we're not in an ABC, so likely we've had the ABC, it's completed here as I have it labeled as an A, and now we have a 1-2. So you've got to stay open to that possibility and not be rigid in your expectation that the market must come down here and put in a lower low than the A wave. Nothing requires that to happen. In fact, as we sit here on the 1 hour, you can see we're just sitting in the Vegas wave, right between the two. So this, I mean, for all we know, this is about to punch higher. So it becomes a question of, well, where is my probability play? So before we could quantitatively say that we have a 1-2 and the correction is complete, at the very least, we're going to need to break through the 618, 65. Then we got to start pushing towards new highs if we're going to have a 1-2 into a 3, and then we've started going up to complete the 5th. Can't get there yet. Right now, I can pull from my high to my low here and see that we've just gone to the 50 and then started to pull back from that. So we're kind of in that spot where, it's not an unreasonable play to be getting long right there if you think the correction is done. So maybe you can get some help from your oscillators, right? So you can see this was a contender yesterday. In fact, that was a trade that I took and some of my members took as well. We were quick to move the stop. So we took it right here because of that turn in the RSI. So let me see if I can show that to you. So right where the RSI lines up there, as we turned here on the possibility that the ABC was complete, we took that for sort of a short-term trade, ended up with a very small loser because once we moved away from this pivot, then the stop went to a tick below the low. We came back last night and wicked out. So, about a $30 loser, which I'll take all day long. I have no problem with those. Much rather be doing that than sitting with my original stop, knowing that the potential for this thing to move down still remains fairly strong. So now looking at it, I'm not inclined to be a buyer here because I think the likelihood is more so that we're going to come down and break this A wave. That gets me very, very interested in being a buyer down here at some of these support zones. Again, going to the oscillators, can I get any help here? Well, you can see the failure here for the RSI to go from this below 30 zone, or as it's considered an oversold zone. We don't get up above 70 into the overbought zone. So we fail at the 50 and start to move down. So what I'd like to see, where I have more confidence in the buy, is if we're going to come back down, take out the A low here, see the RSI come back down. And again, I always think of it as the energy potential to move from low to high. Can we get that energy potential because it creates better opportunity for the market to move off of the whichever support zone it plays to move from that and then have that energy to move higher. I'd like to see some more volume coming in. I'd like to see some divergence here in the wave count. So these are all things that can help you build more confidence in where and when to pull the trigger. Right now I just see this channel probably needs to get tweaked a little bit. I just see a channel. Let's get it lined up just right. This channel in play right here. So from a structural point of view, this is a contender, and all I've got marked here, that's the 38 of the let's see where I've got it. Yeah, that's the 38 of the low to high on the assumption that this wave is complete. So I'm looking for the 38 of a retracement of the entire structure. So here's the 38 right here in gray, this gray line. And you can see this little dash red. I have that alarmed because I want to know if it gets there. So there's the 38 right within a few dollars of the negative 23, which is the fib target and the algo target from the pull high to low back to the 50. This is a contender for the C wave right here. We know that if we go back to our little reference sheet that I refer to often, that 15% of wave fours will turn between 24 and 30%. It's the minority. Well, there's 15% here, 15% go beyond the 618. So the vast majority are between the 38.2 and the 50. So if we come back to this, well, here's our 38. Here's our 50. So we have this secondary zone down here. So this is a contender. We have good structure here. We have the 200% upsloping edge of the pitchfork there as well. So both of these need to be considered. Now here's the 100% alternate price projection. Swing low, projected from the B. We're looking for that relationship between the A wave and the C wave. So, this also a very strong potential support zone. I'd be very comfortable buying there off of that structure. And then as we go down lower, we've got the 61865 window that you see me refer to often. We'd be at that point here. Take note. We'd be challenging the wave 1 high here of this entire move, which would potentially change the count. That's splitting the 618 and the 65. So also a very important potential support zone down here. I'd be surprised if we get there, but then again, market surprises me all the time. So you want to have these marked out on your chart as potential support zones. So if you find yourself there and you see additional confluence there, maybe it's the RSI starting to turn, or you're getting a noticeable price reaction out of that support zone, you can be prepared to pull the trigger and get on that trade. If you see good movement out, then you can be fairly quick to reduce your risk. Just the way the kind of the smart way to play this, because we're so extended here in Bitcoin. That there's nervous money up here. There are profits that are sitting that are unrealized, right? So people don't want to see those be given back. If we go from call it 7,600 to 6,600, that's a lot of give back. So I know there are stops along the way down here that can give this some fuel to keep pushing lower. So it's right now you can't say anything other than we are still internal to this B wave, right? Until this low breaks, we can't make a call on the count yet. We don't have enough data to call anything. So either the 618 breaks here and we relabel this as potentially a 1-2. That's a contender. Or we go down here and we find this support and we get the completion and that kind of fib relationship that we're looking for between the A wave and the C wave. So a lot of different ways that this can go. If we go down to the 15-minute, it doesn't get a whole lot better. In terms of our being definitive about what we're seeing, we're kind of in a wait and see. If you're not in the market and you're looking for the next long entry, you're kind of in a wait and see mode, right? So this was the trade we took yesterday, right? So we pop from the 100%, go right to the 50 in this retrace, right? That gave us the opportunity to move the stop up to a tick below the low. So our entries on the 100, it was a very, I think mine was $20, right? So a very low risk trade, and if it runs, it runs, but your risk is essentially non-existent once you get that kind of reaction. And you see the reaction that we had from the 100%. That's the kind of thing you're looking for from one of these support zones. So now we have this geometry here on the way down that I would like to see come into play. So as we sit here, we get this time element. It becomes a question of when do we get there. So the more I move this box over, the further we get from the median line, right? So now if we look at it and I take the arrow, if we're going to go straight down, well, here's the median line here. That seems unlikely on the next 15-minute bar. So it starts to push me down here looking for that geometry and that very strong tendency for the market to want to return to the median line. Right, so we've broken the internal pitchfork, so we've gone to the 1.5 here. But unless there's a break that goes the other way, that goes this way, this starts to look more and more like likely contender here. And note where we are there. That's the 6,600 zone, which would put us at the 1618 of the A wave projected from the B wave. So you've got all these confluence zones down here, and there's no way to know which one's going to hold. You just don't know. So it becomes a matter of risk reward. If we're simply correcting, right? This is where you go back to the longer term and go, okay, well, if I'm correcting here and I'm just putting in a fourth wave, well, I've got great upside potential. I'm just looking to time my entry. I've got potential up here to 8,000, 9,000 and beyond. So, that's kind of the only way that you can practically approach this. You label these support zones, and then you look for that confluence on a smaller time frame, and maybe a trigger. Maybe the oscillator helps you get a little more confidence in pulling the trigger. If you see that start to turn, certainly you'd want to see a reaction from the price. But we before I finish recording here, we may be tapping into the 38.2. I don't have great geometry there with that, because I'm in between the 100 and the 200, and I know algos are going to buy at the 50, right? So this is the one I'm going to be a buyer here. Put it to you that way. I'll be looking to be a buyer here because I know algos will buy there. Now, just because they're buying there doesn't mean that it holds, but I know there's going to be a reaction there. So it's an opportunity to get into the market and be conservative with the risk, because if it's going to blow through that, no need to continue to ride it down. Then we're threatening potentially this wave one. And then it's more risk than I want to take, given how far this could go. So that's just how I would approach it. But use your own judgment relative to the size that you're trading and your own risk tolerance and your own trading plan. So very interesting. We've been waiting for this correction. It would be nice to see it go in a traditional format, but don't expect it. We've had very tricky corrections because the demand is so strong. So nothing should surprise you in Bitcoin, particularly when you have this much money in, this many people in, this many people that are perhaps a little overextended, just sitting on a lot of profit that they're going to be quick to take. So, as is always the case, you approach with caution, right? The market, as I like to say, it gives reluctantly, it takes aggressively, and without mercy. So, don't let any one trade hurt you. It's my mantra. Okay, guys, that's probably enough for now.